Okay, looks like everybody's logged on, so let's go ahead and get started. Hello, everyone, and welcome to our Debt-Free Life Business Solutions live webinar. Today, I'm going to provide a quick introduction to our Debt-Free Life Business Solutions program. This is how we're going to work with our clients who own small businesses and teaching them how to eliminate their business debt and helping them to grow and make their business more profitable. My name is Bill Talopoulos. I'm an agent with Symmetry Financial Group, and I'm one of the founders of the South Shore Agency, which is based here in Kingston, Mass. We're so excited to introduce our Business Solutions program to you and show you how we can help your business save money, increase profit, increase cash flow, and eliminate business's debt. Right? As a result, you're going to be increasing the valuation of your business and setting yourself up and your business for future success for generations. The best part of our program is that we show you how to accomplish all of this without adding another monthly bill or invoice. We do all this without you spending any more money per month than you're already spending. Simply working together as a team, all we do is identify your inefficient dollars, and we redirect that money into a financial vehicle that will work harder for you and not the banks. Our business solutions will show you how you can truly operate your business debt-free simply by using some very specialized cash value whole life insurance in combination with concepts that some of you may have heard of, like debt snowball, debt avalanche, and infinite banking, which have been around for decades. And it's just now that we're bringing these concepts into the 21st century with some pretty amazing proprietary software that we have here at Symmetry Financial Group. So for today's virtual presentation, I plan roughly for around 15 or 20 minutes. This will give me enough time to provide a quick introduction to our Business Solutions program. I'll present this content as quickly as possible and show you a real-life case study. Trying to keep the schedule, we're going to go ahead and keep everybody muted for this call. Please leave any questions that you do have in the chat. Team member John Zagoras will be monitoring that chat and will answer any questions that you do have. Before we can even start to help you in your business, just like anything, we got to start with a foundation. And that begins with what we believe are the 3 keys to creating a successful financial plan. And that's learning and understanding the 3 phases of our money and how our money works. First phase is known as maximization. This is ensuring that you make the most out of every dollar that you've earned and that you've saved. Second, it's called the accumulation phase. And this teaches us how to use every dollar multiple times over. Just like the banks, they use our money up to 7 times. We want to position your money in a way that it will pay, you can pay yourself the compound interest that it earns and not pay the lenders that interest. The final stage is distribution, which is making sure that your money will be available to you when you want it, so you can enjoy a worry-free retirement. And I can show you how to do all of this simply by utilizing the concept of our Business Solutions program. So over the years, I'm sure you've all heard the expression cash is king, right? We've all been trained to believe that by using our cash and by making cash purchases, we think that we're saving money by doing this, right? We're led to believe that there are several advantages to paying cash for our purchases. I'm going to go ahead and say, yes, there is one major advantage of paying cash. And that's by paying cash, we avoid having to borrow money from a lender, right? The reality is by using your cash, and you're giving up the opportunity to make money on all that cash that you've earned and you've saved. Now you give that opportunity to someone else. Secondly, if you follow the traditional thought process, our other option for us to make purchases would be to finance your purchases through a lender, like a bank. Now, the downside to this is by financing your purchases, now you're paying interest to somebody else for the use of their money, right? And as much as we love our local bank, and as a business owner, I'm sure over the years you've relied on your bank heavily for checking, business loans, capital, maybe even some lines of credit. And you most likely formed a great relationship with your bank. The reality is you have to realize that a bank is a business, and the bank makes money off of us. They profit when we borrow their money. So let's take a minute to break down the process of borrowing from a lender. So in this example, you walk into your local bank, you deposit $10,000 into a bank account. Maybe that bank gives you 1% interest on your money. The next day you walk back into that same bank and you ask that bank to borrow $10,000. Well, what's that going to cost you? right? The bank is going to charge you anywhere from 4% to maybe even as high as 29% to borrow their money, while they're only paying you 1% on the money that you just deposited. I want to show you that there's a better way. I want to show you what it would look like if you became the bank, right? What would it look like for your business if you could borrow from your own cash reserves and you collect that compound interest on your money and not giving it to the banks? So here's an overview of a real life case study. Everyone say hi to Joe. Joe is your average small business owner. He's 50 years old, owns a small local business that thrives, does well on a day-to-day basis. But he knows that the growth of his business is hindered by one or more of the following issues. First, he feels like his business is restricted and he's frustrated by the amount of debt that he carries, which in turn restricts his cash flow. He's overwhelmed by the taxes he has to pay, and the access to his funds and the flexibility to spend is limited. Now, being a small business owner yourself, I'm sure you're familiar with at least one, if not all of those issues. So here's a quick snapshot of what Joe's debt looked like, which really wasn't too bad. It's probably very similar to other small businesses. So Joe's business has multiple equipment loans, averaging just over 5% in interest. His business is financing a company car and a company truck, together averaging just over 4% in interest. Joe has 2 construction loans that again average just over 4% as well. Then the business maintains a line of credit with the bank. So when you break it down, his average interest rate for all of his debt is 4.82%. The principal balance for his total debts equals just over $2.1 million. And collectively, the company is making monthly payments of over $26,000 every single month to service that debt. To help realize the cost of borrowing money from a bank, and again, this is because you're paying interest to the bank for the use of their money. So let's dive in. Let's see what the real cost is for Joe with just one of his construction loans. So this is a breakdown of the amortization schedule and shows you how much of Joe's money is going towards a principal and how much is going towards interest over the life of that 10-year loan. So it's a 10-year, $1.5 million construction loan with a 4.5% interest rate that he's making a $15,000 monthly payment on. You can see here in year one, out of $186,000 that he paid annually, there's over $65,000 of his loan payment going towards the interest. Right. Fast forward to year 5, Joe still has $41,000 of his annual loan payment going towards interest. And finally, in year 10, Joe will get to roughly 98% of his loan payment going towards principal rather than interest. So what is the actual and the real cost of interest on just one loan? Right, let's go ahead and take a look at the details of that loan. So Joe took out a 10-year, $1.5 million construction loan for the business through a bank. He pays 4%, 4.5% interest rate on. That equals out to Joe paying $15,000 monthly payment for the life of that loan. The reality is, at the end of the 10 years, Joe will have paid $1.8 million to borrow $1.5 million. That's because Joe will have paid over $365,000 in interest over that 10-year period to the bank, which means that in that 10 years, the bank made over $300,000 off Joe. And that's $300,000 that Joe had to pay the bank and not keep that money for himself. So what does the future look like for Joe and his business? Well, if Joe doesn't change the way he operates and he stays on this course, Joe's business will be in debt for 27.8 years. And over that 27 years, he will have paid over $650,000 in scheduled interest to his lenders. Now, remember, like I mentioned before, this is him paying $26,000 every month to service this debt. And as far as Joe thinks, he has a total debt equaling just over $2.1 million, which on paper is his principal balance. Right? The reality is that his actual and his real debt is much more because the interest that is scheduled to pay on top of that $2.1 million is $650,000. Right? If you add that up, that makes his actual and his real debt just over $2.7 million. not the 2.1 that he thought it was. So it's time for a reality check. What's your business's real debt? How much are you scheduled to pay in interest? How many years will you and your business be in debt for? I want to show you how our debt-free life business solutions help Joe. And this is the type of personalized report that our software will design and implement for you when we work together and build a plan for your business. So instead of Joe being debt-free in 27.8 years, if Joe pivots and fundamentally changes the way that he operates and follows our plan, his business will be debt-free in 6.4 years, right? He's going to save potentially over $10 million in liquidity over that same 28 years that he would have been in debt. Our plan will help his business save over $270,000 in scheduled interest. As a result, Joe is now freed up over that $26,000 a month. That comes out to over $312,000 every year. Now that's important because that significantly increases his cash flow, in turn creating other business opportunities for him and his business. Now Joe's in the driver's seat. Joe's in control, not the bank. Joe doesn't have the banks telling him what he can and cannot do. Now, the best part about our debt-free life business solutions is that we accomplish all of this without you spending any additional money than you're already spending. We're not creating a new or an additional monthly invoice or any monthly bills that you need to pay. All we're doing is identifying your inefficient money, and we're redirecting that money into a financial vehicle that makes more sense. We'll have your hard-earned money working for you and not the banks. So here are some of the key benefits of using our debt-free life business solutions, right? And what it will allow Joe to have in place. By following his plan, Joe will now create a succession plan. He's created an exit strategy. Joe will be taking advantage of tax savings. His debt payoff will increase the equity in the business. Now he's increased both his cash flow and liquidity, and the premium and loan payments are flexible. So now he can personally finance any business equipment that he needs or any future real estate purchases without having to take a loan from a bank. Because we're using the vehicle of a whole life insurance policy, his cash values are tax-free. But all this is resulting in less depreciation. At the same time, we're increasing Joe's business valuation. So the question of the day, how is this all possible and how do we do this, right? We accomplish all this by harnessing the power of life insurance. It's not the type of life insurance that you think of or that you're accustomed to. These are very specialized participating whole life insurance policies. Now, one major advantage to using life insurance is that now your money will be working harder for you because you have all the access, flexibility, and liquidity of the cash value, and you earn guaranteed compounding interest plus dividends. And because the financial vehicle is a life insurance policy, when you pass away, your beneficiaries or your business are going to receive a lump sum tax-free death benefit. Your policy is also going to have terminal, chronic, and critical illness riders attached to it. Now, these riders allow you to access that death benefit funds while you're still living. If there's an illness like cancer, heart attack, or stroke that prevents you from continuing to work and run your business. That means having access to those funds while you're still alive can help you maintain your financial obligations. It can keep your business operating on a day-to-day basis and continue to grow even if you're not hands-on every day. So it's usually at this point everyone asks how it works, right? How can I start to help you in your business and start helping you eliminate your debt? The next steps would be us meeting virtually or in person for complimentary debt review and financial analysis. Then we start working together as a team. I'll help you identify your business and your personal needs to help design a plan specifically for your situation, right? We'll identify ways to create and capitalize on your own private bank. Together, we'll take an inventory of your reserves, your assets, and identify where your inefficient dollars may be going, and then redirect those funds into the right financial vehicle that's going to help you accomplish all of this. We will work together as a team, design and implement your personalized plan, which we're going to treat and follow as your roadmap to help you and your business get out of debt. So following this webinar, I'll be sending out an email. I'm going to attach a calendar where you're going to be able to select a date and time to schedule your 30-minute complimentary debt review. You're also going to see you'll also see a financial analysis attached on that email. Prior to us meeting, it's always helpful that you know what your cash flow looks like, credit lines, what your loan balances and interest rates are, what your monthly payments are for any mortgages, loans, credit cards, as well as any reoccurring miscellaneous monthly expenses. When we meet for your complimentary review, we're going to start going over that financial analysis form. We're going to take a look at that holistically for you. Our software is going to go ahead and generate multiple personalized scenarios for you. Then we'll schedule a second meeting so I can present your plan to you. And it will be at that point, I'll be able to show you how much money and scheduled interest that you're going to save. I'll also be able to tell you the month and the year that you're going to have all your debts paid off. More importantly, I will show you how we can accomplish all of this without you spending any more money than you're already spending. So be on the lookout for that email. Enter any questions that you do have in the chat. John and I will get those answered for you. Also, if you'd like a recording of this, please leave your request in the chat. We'll get that to you ASAP. I know that you guys all have crazy busy schedules and that time is valuable. So with that in mind, thank you everybody for spending some of your time with us. I hope you found some value in the information. We look forward to helping all of you start living a debt-free life. And just remember, everyone here started their business to make money for themselves and not to make other people rich. So let's take all that money away from the banks and put it back in your pockets. Thanks, guys. Thanks for your time and have a great rest of the day.